What is going on today, Generals? Welcome back to the BI Edge. Today, we're zooming in on the South Australian petroleum industry using data-driven insights to understand long-term exploration patterns and what they mean for economic policy, energy security, and investment strategy. The dashboard today will cover current active leases in the South Australian petroleum industry, including historical leases, both post World War II, that'll cover the last sort of 50 years of sort of data there. In addition to market movements within this industry, permit applications, we'll look into which companies have tried to acquire a lease permit recently, in addition to the historical 3D seismic shot throughout this region. We'll once again be utilising tree maps to scale the whole landscape for each of these market segments. We will be touching on a few different sort of topics and linking our data back to energy security. We're going to be looking at surge in granted leases, how that reflects our preparedness to supply future domestic energy needs. This is a vital metric for national energy security frameworks. We'll be looking at the relationship of this data with capital allocation. So, where are the peaks and the troughs in the data? If we're not noticing some spikes in lease approvals, these often signal capital injections from both government exploration grants, in addition to private sector investment and speculation, which is useful for timing investment cycles when you're looking at investing in some of these companies or these commodities if you're a commodity-based trader. We'll look into exploration versus production. Today, it's more predominantly exploration, but as we acquire more production data from AEMO and other sites, we'll integrate it together, this narrative. So as we know that, lease concentration by few operators may suggest sort of dormant exploration, which could be great for mergers and acquisition or government action. Real productivity comes from shifting inactive leases into production-based mode within this industry. We also want to sort of look at, with the peaks and troughs of the leases, when a lease goes active, the economic spillover isn't just, greater energy to the Australian economy. It's also local jobs, roads, and royalties to the government. And dashboards like this can help predict regional GDP movements as well, just with the data that we have that we can acquire from the government. And lastly, the last topic here that can be useful for this dashboard has relevance to is environmental efficiency, historical seismic data, being recyclable based resource. Instead of repeating old work, we can recycle old seismic based data from expired leases and then use that for lithium deposits or geothermal exploration, which will further reduce costs and our environmental footprint. Okay, so that's quite useful there for the energy transition. Strap yourselves in and here we go. As you can see here, we've charted active petroleum leases by granted year and total square kilometres held. There's a notable peak here in 2012 and again in 2024, indicating exploration surges that likely correspond to oil price recoveries and regulatory incentives. These peaks in lease activity often precede capital inflows into local economies, as I stated before, creating jobs, triggering infrastructure projects, and bolstering regional GDP through contractor activity and exploration-based spending. So we can see here that in these periods here, 2007, 2012, when the lease square meterage was at its highest, that's when we would have seen quite a lot of jobs sort of created within this South Australian based market. In these downturns here, um, this is when there's job loss and there's not as much happening within the market because there, isn't new leases being granted and so forth. So, furthermore, spikes in the total square kilometres and granted leases indicate investor confidence or speculative surges within the gas market. All right, so we're just going to have a little look here next just to sort of see, okay, so I'm going to go 2012 and 2024 with the big ones here. So we're just going to have a look, what's the breakdown there? And we can see the lease numbers, the operators here, who are the petroleum-based companies with these leases, and we can see, okay, this is when it was granted and this is when it expires. Okay, so some of them, these two look like they've expired already, but still active. So they must have applied for a renewal, maybe. We can see Hughes Denim there. They've still got theirs on PL 143. Okay, I have a look over here. This is a big year here, it's 2012. Okay, so if I go 2012, all right, yeah. So these guys, okay, so yeah, that was what we just covered. These guys over here, 2024, this is going to be a big one. So Petrex, you can see here that Petrex has really got most of the market here of leases in 2024. It just takes one big company to go in and they can, change this value quite a lot and really, change and control the job creation within that area and make a big difference to it. So if we have a bit of a look here now, I've got this table down here descending with the highest value here um, of total square kilometres throughout this period here. All right. And this is the largest lease to the smallest lease is the best way to sort of look at this. Okay. So Elpis Resources have the largest lease here on PEL 81. And then Petrex have PEL 685 and 682 here, which are nearly 10,000 square meters. Behind this, 15,000. Hughes Denim nearly at 10, Petrex nearly 10. Now, gold hydrogen's been one that's sort of recently popped out there in 2021 due to expire 26. They've sort of started a bit of exploration within that region. They've had a bit of seismic activity or a bit of seismic work and surveying conducted for their hydrogen-based projects there. We're trying to extract that natural hydrogen from the ground. CCS, carbon capture storage, Arkaringa, I believe that is what that would mean. Here, another one sort of in mid-player here at the top. Okay, and then we come down here and we can sort of see smaller players in the market down the bottom here, like your Below Energy. Okay, so that kind of just tells us what's sort of happening. If we want to also look at it, we can look at it on this side here. It just gives us a nice map here as to who the big players are in the market, what the size is, or the rounded size is of the lease. And from there, we can sort of have a bit of a look and go, okay, well, Petrex and Elpis Resources and CCS Arkaringa are probably the main drivers here in more recent times for job creation in the local South Australian economy. And the spikes in granted leases here is a good thing because that or active lease, a number of active leases here is good because it would suggest that if we're pushing exploration and the size of sort of active leases that are producing is higher, then that will help long term with Australia's energy security needs. All right, so I'm going to go to the next page next. Okay, so this is just scaling the full market again. So we're doing the tree map once again. This is exactly what we just had here for the petroleum leases by square kilometre. You can see the total square kilometre here is 133,000 square kilometres. Okay, so it's pretty serious when we look at that. If you want to learn more about this, you can go on to the SA Rig website and have a bit of a look at where these leases are located. Okay, so if we have a bit of a look here, we'll look at Petrex, okay? All right, I want to know the granted year. Okay, so most of it was granted in 24, okay, and what lease number was it? Okay, these are the three big leases that they have here, okay? And if I want to know gold hydrogen, what have they got? This is 21, I believe. It's PL 687, but if I go here and I want granted year 21, what is the lease? PL 687, okay, cool. And then the expiry year, there it is, okay. Now, what I've done here is I played around with some M code a little bit to, do financial years. So create financial years off the calendar year when cleaning the data in Power Query. So if I want to go active, what's new last or we're getting close actually, this financial year, okay, it's just Petrex. And what leases come in the last financial year? These three, okay? Financial year before that, okay, we didn't have any. Last one was 21 to 22. Okay, and that was gold hydrogen, H2X, Ganjo Energy, Modelo Energy. So I can actually go back and have a look, which is pretty good if you want to sort of get the company's financials and have a bit of a look at sort of past-based data or bring across the operational-based data in your business in addition to your financial data to also look at the market data to sort of get that whole picture of what is happening and going on, okay, to make those data-driven decisions. So historical leases in South Australia, okay, so over here on the right-hand side, visualize which companies dominate the land under lease, okay, so as we can sort of see here, we can see that in this period here, Santos Limited was the largest. Okay, you can see the total square kilometers there, 500,000 or 510,288 there. So massive in this period from 45 to 1967. There was a lot of exploration and a lot of leases acquired by Santos in this Delhi, Australia, and the RF Bristow for Santos in this sort of period which is really interesting because it tells you about the historical work that has happened within the South Australian based market. Okay, so if I want to look at, I'm going to look at these spikes here, and because that's probably what we're interested in, what sort of happened there. We have a look down here. We've got RF Ristro for Santos. That was a big acquired lease down here on OEL7. I'd have to have a look at what that sort of fits over today, whether that is still the name of the lease or they've changed the numbers. But yeah, if we go here next, we can have a look again. Santos Limited, another massive lease here on OEL 21, Delhi Australian Petroleum Limited, and General Exploration Company of Australia. Okay, so you can sort of see that in the 50s and the 60s, that was what was going on here. And then we saw, mid 50s, massive, and then before a drop. So what this sort of tells me here is that there was a lot larger players back then, less players in the market. The larger guys were taking out much larger leases comparatively to the smaller guys. So if I go here and I sort this by total, okay, and this will go largest to smallest again here. We can see here that there's about 131,000 total square kilometers acquired in this period. And yeah, you can see that they're the top three here. And that's the leases and the expiry years. Okay. And we can use that to uncover a little bit of history here as to what's going on and what sort of happened on what site over the years. Okay. So that was post-war. Now we're looking at, from sorry, we're still looking at the same one here. This is the tree map, so scaling the whole market from that. We can see here, once again, we can go back to financial years. I can hit 60s if I want and so forth. And I can sort of have a bit of a look at, who did what. So 62 to 63. We can go in here and look at the lease numbers. Okay, cool. I can see what those guys have got and so forth. I'm not going to spend too much time on that. Historic leases in South Australia, 68 to 2022. Okay, so this is the last 50 plus years here, or 54 years that we have. Okay, so Um, this here sort of what we've just sort of seen here over this sort of period is we've seen the exploration boom in the late 50s, peaking in 59 here. This is, you know, over 1 million square kilometers leased in 1959. So I just want to come to back to this point. What followed was a dramatic decline, and this here is a textbook example of a boom and a bust cycle driven by post-World War II oil demand, followed by policy stagnation and a shift in global supply chains. So this was sort of around that era where they thought the world was going to run out of oil. A lot of people were purchasing cars, and that was the oil and gas was the way to sort of run cars back then. Understanding these historic patterns is critical to avoid repeating investment misfires or overbuilding pipeline infrastructure based on short-term peaks. Okay, so if there's a big peak in the market, um, like what sort of happened here, again, it's important that businesses don't over invest in infrastructure because, if they do, they may not get their return on their money. So that's sort of just what that is all about there. Um, okay, so this is what we were looking at here. We're looking at the total lease by square kilometre by lease granted year, again from 68 to 2022. All right, so you can see here that Stewart Petroleum is the largest here, with nearly 50,000. So that's, yeah, pretty substantial there for one lease. And we can sort of see here that 69 was quite large here. Santos at the top still, been in the area for a long time, before recently sort of moving more offshore. Okay, and we can sort of have a bit of a look, okay, at where some of this is. And there's in some of these areas there just wasn't really as much. You sort of see the smaller players entering the market in these sort of down cycle based years or downturn years. And if we look here, so the last one that we saw that was strong within this data set here was about 2013. And if I look here, that's the, say, PEX Limited, Chevron. I wonder if they probably could be offshore leases there. TriStar Energy has really ramped up, as of late. So that's interesting. Beach Energy as well. So that kind of just gives us a bit of an outline as to, what sort of happened in the market there. But we haven't matched anywhere near what we were doing here in the 60s or 69. You see here that's 279,838. If we go back across here, you know, there's your mill, and this is all outside these outliers. I'd say, it's all pretty consistent really as to what what we're doing in the market, maybe even a little bit less in some of these years here. Okay, so that's that. This one here, this is just same again. We're just looking at the full scale here of that 1.8 million square kilometres from 68 to 22 in petroleum leases in South Australia. So we can look at Shell Development, Woodside, Stewart Petroleum. These are the biggest players here. If I want to look at just recently, okay, I'm interested in 22. So Gidgee Energy Proprietary Limited, lease number, okay, PEL 678, okay, so just a small lease there, comparatively. All right, so yeah, that kind of just gives us a bit of an idea as to sort of what's going on. If I want to know what's expiring, I can go, okay, in 28, what's going to expire? Okay, and if I go here to operator, okay, Elpis Resources have got a few in 28 that are expiring. Okay, and then I can see there. All right, so that just helps me map the market again. Okay, so South Australia permit applications next. So these are the companies that have application licenses for mining leases or petroleum leases currently in South Australia. So we can sort of see, what year they sort of put in their application here. H2X South Australia, white hydrogen, Hira, exploration. There's a few different sort of companies here. Elpis Resources have got a few more in there. TriStar. So we can sort of have a bit of a look at the movements there as we go. If I look at 24, we can see gold hydrogen again there, sort of looking to acquire another lease there that they put in 2024 to probably expand their operations. Okay, South Australia 3D seismic history. Okay, so here we've got 3D seismic shot by square kilometers by year here, so we can sort of see both onshore and offshore. So we'll start here. We'll look at the offshore market first. So we can see that 45,493 square kilometers of seismic's been shot offshore, and that market's actually gone up in terms of 3D. But if we look at onshore, we've sort of had quite a bit of up and down here. Okay, and the largest project here has been 2,991 square kilometers. And we have a look, it's Terex and Western Eco. And they've worked with Senex Energy, Beach Energy, and then Western Geco worked with ASA and Drill Search. If we look down here, we can sort of see, okay, that was the amount shot. What was the energy source? What did they use for it? Fibrosis. And then we can also have a look at the basin down here as well. If I want to go in, we can see it was in the Otway and the Cooper Basin. Okay, if I want to look at the Cooper, I don't think there would have been much in the Otway. No, so Cooper. All right, so that kind of just gives you a little bit of an idea there as to sort of what's going on. And what the full sort of scale is of everything. But you can see the large companies here that have shot the most seismic. So Santos is a big player. We look at onshore, it's Santos, Senex Energy, and Beach Energy that have shot the most amount of seismic from throughout these years in the 3D seismic market. Anyway, we don't have any 2D data. But I would say that's a pretty good kind of indication there as to who has the data for seismic that can use that for machine learning for the renewable energy based projects. So operators could try and, renewable energy companies in the lithium space or copper space, or for example, could acquire this from the seismic company or from potentially the operator on one of these leases in the future if they decided they wanted to do that. Okay. And this is the seismic market here. So we're just going to look at onshore by operator. Okay. So we might go onshore. We're going to go year. So year seismic got. Okay. It's not in the best order here, but let's just go 2016 because that was probably the most recent we've got. I can look at the lease numbers. Okay. And I can go, okay, that's what we shot on there. And who was the operator for this? Santos Limited. Okay. So that just shows me, again, how to scale the market there. All right. So just to sort of finish off here, if you're in the resources sector, government, or you're a strategic analyst and you'd like to access to custom dashboards for your organization, feel free to reach out. BI Edge is here to help make data practicable, scalable, and profitable. Thanks for listening in today, guys, and I look forward to catching you in the next video. Cheers.